Hey everyone, welcome back to Corporate Decoder, the place where we try to find something spicy amongst the dry corporate filings. Today we're diving into a report that might have a company feeling a little woozy, and trust me, it's not from too much caffeine. So picture this, the SEC is like the ultimate watchdog for publicly traded companies. And sometimes these companies get a little nudge, or maybe even a full-on tap on the shoulder because they're not quite playing by all the rules. Today's report is about a company that has been told its stock price has dipped a bit too low, and Nasdaq wants to know what it plans to do about it. It's a classic case of, need to fix this fast. Alright, let's get down to business with this Form 8K filing. This is like an immediate update for investors, telling them something important has happened. The company we're looking at is called Cytosorbents Corporation. They are based in Delaware, and their ticker symbol, the code you'd e-punch in to buy or sell their stock on the market, is CTSO. Now, what's the big deal here? Well, it all comes down to their common stock. Think of common stock as the basic ownership shares of a company, for CYTOs. All RBENTS Corporation. These shares are traded on a specific exchange called the NASDA. Q Stock Market LLC, which is often referred to as Nasdaq Capital Market. This particular report is all about a notice Cytosorbents Corporation received on the 2nd of October 2025. The notice came from Nasdaq's Listing Qualifications Department. Basically, Nasdaq oversees the companies whose stocks are traded on their exchange, and they have certain rules that companies must follow to stay listed. One of those rules is about the stock price. Nasdaq told Cytosorbents Corporation that they are not in compliance with a specific rule, Rule 5550 A2. Now, what does that rule say? It's all about the minimum bid price requirement. This is a rule that says a company's stock price needs to stay above a certain level, and for Cytosorbents that level is $1 per share. And here is the kicker, their common stock had been trading below $1 for 30 days in a row. I mean, that's a whole month of the stock price being in the red zone. This isn't just a small dip, this is a sustained period where the stock price wasn't meeting the minimum requirement. Now before everyone panics, this notice doesn't mean the stock is delisted tomorrow. The important thing to understand is that this notification has no immediate effect on the trading of their stock. Nasdaq is giving them a chance to fix it. They have a good amount of time to get their act together. They have 180 calendar days from when they got that notice, which puts the deadline at the 31st of March 2026. That's about 6 months to turn things around. So, what do they need to do to get back on track? Simple really, the closing price of their common stock needs to be at or above $1 for at least 10 business days in a row. That's 2 full trading weeks where the price stays above that dollar mark. If they can do that before the deadline, they will have successfully regained compliance. But there is a small catch here. Nasdaq does have the power to extend that requirement if they think it is necessary. So it's not a guaranteed 10 days and you're in the clear, depending on Nasdaq's judgment. And what if they can T-fix it in the first 6 months? Well, it is not the end of the world just yet. If they are still below that $1 mark by the deadline, they can ask for another 6 months. But to get that extension, they have to present Nasdaq with a plan, a solid strategy on how they are going to get back into compliance. It's like getting a second chance, but you have to show them you've thought it through. Cytosorbents Corporation says they are going to be watching their stock price very closely and will look at all their options to get back above that dollar threshold. However, they are being quite honest here. They are saying there is no guarantee, no assurance that they will be able to regain compliance. And they also mentioned they need to make sure they comply with other Nasdaq listing rules as well. This implies there might be other areas of concern that aren't detailed in this particular report, or they are just being cautious. And finally, just like any official document, it needs to be signed off. This report is signed by Dr. Philip P. Chan, who is the Chief Executive Officer of Cytosorbents Corporation. This signature basically confirms that the information in the report is accurate to the best of his knowledge. Now, let's look at this from a broader perspective. This filing is essentially a warning signal. When a company's stock price falls below $1 for an extended period, it often indicates that investors are losing confidence in the company's future prospects or its ability to generate profits. This can be due to a variety of reasons such as poor financial performance, increased competition, or broader market downturns affecting the industry. The fact that they have 180 days and potentially another 180 shows Nasdaq's willingness to work with companies, but it also highlights the seriousness of the situation. It suggests that Cytosorbents Corporation is facing significant challenges in terms of market perception and investor sentiment. Their mention of considering their options is vague, but common strategies could include a reverse stock split to artificially boost the share price, or the company might be hoping for positive news or a market turnaround to lift the stock organically. However, the lack of assurance in their statement is telling. It suggests management is aware that regaining compliance might be an uphill battle. We're not getting deep into financial tables here because the core issue is compliance with Nasdaq S-listing rules, not necessarily an immediate financial crisis shown in detailed numbers, though a low stock price is a symptom of underlying investor doubt. The real story is the company S struggle to maintain its status on a major stock exchange, which can impact its ability to raise capital and attract future investment. So, what is our take here at Corporate Decoder? Cytosorbents Corporation is facing a clear hurdle. The struggle to keep its stock price above $1 is a significant red flag for investors. While they have time to correct this, the uncertainty they themselves express is a notable risk. Their success will likely depend on their ability to communicate a compelling strategy to Nasdaq and, more importantly, to the market to convince investors that brighter days are ahead. If they can turn this around, it could be a testament to their resilience. If not, they might face delisting. Alright, that is our breakdown of Cytosorbents Corporation. S latest filing, what is your take on these numbers and what they signal for the company? S future, do you think they will manage to keep their stock above $1? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description below where we continue these conversations. Thanks for watching, see you next time.